We are all looking for ways to lower costs when buying a home, whether that's the closing cost or that's the monthly payment. I've got 4 strategies that you might want to consider. As far as closing costs, there are 2 options that you have to lower the closing costs. You may want to ask your lender if they have the option to charge you a higher interest rate. Kind of sounds counterintuitive to pay a higher rate, but when you choose that option, what it does is it allows the lender to give you a closing cost credit. So they give you a credit that then lowers your out-of-pocket closing costs. The second strategy is you may want to ask if the seller can pay the closing costs on your behalf. It may not be feasible for every scenario, but it is something worth considering because I do still see it happening even in these tight inventory markets. It may mean that you agree to pay a higher sales price, but it saves you from coming out of pocket for those funds. Second option is you can pay your PMI, your private mortgage insurance, all at one time. Most people, when they think about private mortgage insurance, they're thinking about paying it monthly, and it can be several $100s depending on your loan scenario. Another option is you can choose to pay that mortgage insurance policy out all at one time, either out of pocket as an additional closing cost, or you may choose to roll it into the loan amount. You can even ask the lender if it's an option to pay a higher interest rate and allow the lender to give you a lender credit, thereby buying out the PMI. By saving that monthly expense, that may also help you qualify for more home to help you get what you want. Make sure that you're shopping your homeowner's insurance as well. Just like PMI, monthly homeowner's insurance is going to be included in your payment if you have less than 20% down, or it's going to be included regardless, depending on the loan type. So you'll want to make sure that you at least get 2 quotes to make sure that you have good solid coverage at a very fair price. That will lower your closing costs due at closing and then also help you on your payment. The last option is you may want to consider paying points for a lower interest rate. Points are additional closing costs that are paid to help lower your interest rate below what the par or the standard market rate is for your loan program. Why would somebody do that? Well, what will happen is over time, even though your upfront closing costs are higher, your monthly payment is less, and you will also pay less in interest over the life of the loan. So how you determine if that's a good strategy is you will take the monthly savings between the standard rate and the bought down rate and divide that by the cost of the points, or how much additional in closing costs you're going to pay. That will tell you how many months you need to keep that mortgage in order to make sure that you're getting the full savings of paying higher cost up front. The best strategy for buying a home is personal. So you'll want to make sure that you take the time to consult with an experienced lender to understand what your options are. I'm licensed in 30 states, so please reach out if I can answer any questions for you, and make sure that you follow for additional home buying tips.